there is a popular misconception that all cash is unaccounted. There's a whole world of difference between what happened in 2016 and what has happened in 2023. The builder will demand that 10 lakhs by check and another 4 lakhs in cash. In 2022 December, we were having 32 lakh crores of cash in circulation.
This is Adhitya, Srinivasan, and this is the Private Office Podcast. 2,000 rupee banknotes have been withdrawn from circulation. Is this demonetization all over again? Is this have something to do with the government's push towards digital transactions? To what extent does the Income Tax Act regulate the flow of cash? These are some of the questions we'll be asking in today's episode of the Private Office Podcast. I have with me Mr. J.B. Mohapatra, former chairman of the CBDT. So thank you for joining us.
Thank you.
So I want to begin with the basics. How is cash regulated? How does cash come into circulation? How is cash taken out of circulation in the economies?
So what happens is that there is a popular misconception that all cash is unaccounted and all transactions through bank is squeaky clean and accounted. In real life, this does not happen that way. A pool of money may be held in cash. It may be unaccounted or accounted depending on the intent and the mode of use of that money. Giving you an example, as an employee, suppose you have taken a housing loan of 10 lakh rupees from the bank, and you are intending to put that money with the builder to defray your installment of payment.
Right.
The builder will demand that 10 lakhs in by check and another 4 lakhs in cash.
Right.
So 10 lakhs you give him in by check and 4 lakhs you withdraw from your bank account, your own hard-earned tax-paid money, and give it in cash to the builder. Right. So you have converted your white into his black.
Right.
Now with your 10 lakh of check money or accounted tax paid money, the builder uses it as a margin to take a bank loan of suppose say 20 lakhs.
Right.
And gets or procures an over invoiced bill from a vendor of 20 lakhs. So using your 10 lakh of tax paid money as a leverage, white money, he could manage to get 20 lakh of loan from the bank, which is over invoiced by 100%.
Right.
Right? The bank gave him a loan of 20 lakhs. He paid 20 lakhs to the vendor and took 10 lakh in cash from him, that over invoiced amount. So your 10 lakh white money has been used to leverage a black economy or a black money of 10 lakh. Now let's look at the travel of that 4 lakh by cash, whatever you have given to him, right? So you have drawn your money from the bank and give it in cash on the demand of the builder.
Correct.
That 4 lakh has traveled to the builder and builder gives that cash to a vendor. But the vendor being righteous, or maybe he's in the need of books account, cash account, right? He wanted to build his cash as per books. Right. So he issued a bill of 4 lakh.
Right.
So your black through the builder has turned white in his case.
Right.
So the black and the white is a concept which changes over time in the hands of different users. Your white can be leveraged to generate black by somebody else. Your black money can be turned to white by the recipient. Right? So taking this thing forward, in India, what happens? Your question was, who has the control over the monetary policy? Who issues banknotes, etc. Right?
Correct.
If that is so, banknotes are the sole preserve for issuance by the Reserve Bank of India.
Understood.
Under the RBI Act 1934. Nobody has the right to issue banknotes. So, in this case, the issue of banknotes, control of the bank notes the whole management of the monetary policy lies at the doorstep of the RBI, who shall, depending on the nature of the things which RBI intends to achieve, require consultation of the central government in majority of the cases, majority of issues, majority of events. It requires, particularly when it comes to choice of denomination of notes. So what I'm saying is that RBI is the agency which has the mandate and the authority to issue banknotes. Many of the functions of the RBI, which is in charge of the monetary policy, management of our monetary policy, that is done by the RBI in consultation with the central government. So, what denominations of notes to be issued, when to discontinue, not to reissue, whether to stop, banknotes from circulation, all these depend on the central government's orders.
Right.
But after due consultation of the central board of the bank.
Right. So, and in fact, if one were to look at the provisions of the RBI Act, the Reserve Bank of India Act of 1934, there are several areas where this is actually mandated in the black letter of the law, saying that the central board of the bank will have to, in consultation with the central government, take various measures as you've just outlined. Would you, however, agree, sir, that the prevalence of cash transactions has resulted in various agencies and departments of the government taking a special interest? I fully understand your point about the fact that transactions which are dubious could be both in the form of cash as well as cashless, and it really depends on how creative and innovative the various parties to the transaction have been. But would you agree that there has been some effort among the various agencies and departments of the government to specifically tackle cash transactions? Have they been singled out?
Yes, absolutely so. When we say of our underground economy, that is very popularly used, right? And how to measure the underground economy, we come across different varieties of underground economy. One would be the unreported economy. One would be the unrecorded economy. One would be an illegal economy.
So tell us about these concepts.
If the transactions are not recorded, if both parties, they don't record, then it is unrecorded economy. It is unrecorded in the sense that they may be doing the right thing, but for not wanting to come under the regulations, under anybody's supervision, they will not record that. Then there will be some recording of the transaction in both the parties, by both the parties or by multi-parties, but these will not be reported.
And reported, you mean either
reported to the right agencies and the departments, and the governance setup, right? And the third will be the illegal. The illegal part is the one where the agencies come in. Illegal will be of different degrees of variety. One will be illegal. It is tax not paid. It's illegal, right? Then the use of the underground economy for doing illegal activities.
Financing of terrorism,
absolutely,
drug trade, drug trafficking.
Right. That is where the whole thing is boiling down to. And the propensity of cash in circulation to the size of GDP, that is a good pointer as to where we are in terms of the integrity of the monetary system in which we are operating. In 2022 December, we were having 32 lakh crores of cash in circulation, which is quite a large numbers. India figures in the top end of countries which have cash in circulation as a percentage of GDP at the higher level. While the Nordic countries like Sweden and Norway will have 1 to 2%, UK will have 4 to 5%, USA will be around 7%, India, Singapore, Japan will be at the 13-14% range, which is large, right? There is a need to control and regulate the cash in circulation, because cash is a facilitator for things which we don't know. We don't have an iota as to what that cash is going to do to the nation as a whole.
So I think that really is the real problem with cash, at least from the government's perspective, in that it's something which can slip under the government's radar in terms of how it's being used and the purposes for which it's being used. You'd mentioned a number of interesting statistics just now, and I'd like to get some context around that. So a country like India, and I think the other country you mentioned was Japan, you said the cash transaction figures, the cash in circulation is roughly in the range of 13 to 14%.
Yeah.
In which year? So was it 2022 you mentioned?
21. Yeah.
Has that fallen down, or has that been roughly the same as, say, it was in 2010 or say 2000? Has there been any change in those figures over the last 10, 20 years?
I don't have the data as to whether the figures have changed, but as a culture, as a nation, there are certain cultures and certain nations who are more cash intensive and cash reliant than others. And why people try to intend and continue to hold cash at home? There will be broadly 2 or 3 reasons. One will be the transactional, that there is less of the e-payment infrastructure. Maybe the e-payment infrastructure is far away. Because of age also, I am old. I'm not savvy with the computers and the mobiles. I don't do that. And one will be the education. The level of education will determine whether you use the mobile to make a mobile payment, or I go to the bank and do a transactions, or I just keep on holding the cash in hand. The second point as to why some nations and cultures intend to hold cash at home is that uncertainty, right? And some kind of mental confidence that with cash, I am not facing up a loss. Had I put it in the share market, right? It's a storehouse of wealth for them, which is better than putting the money in any other form. And the third, you will agree, it will be the need for anonymity and privacy.
Correct.
My cash at my home is with nobody's knowledge. That's the best thing to happen to me. So there will be some cultures and nations who would be little more cash intensive than others.
Just to add to that, I think increasingly, certainly in the Western countries, among a section of the population at least, you're starting to see questions and doubts on the confidence of the banks. So the default option would of course be to take your cash and deposit it in a bank, but some people over there are not confident about the ability of banks to survive. And perhaps in those Western countries, there have been episodes which have shaken that confidence a little bit, whether it was in 2008 or whether it's been even more recently in 2023, a few months back. I want to come to the point about privacy. And there is a lot of value, of course, in a citizen or an individual having a sense of anonymity or privacy with respect to his or her financial dealings. Why do you believe that, or do you believe that there is no absolute right for an individual to have anonymity and privacy with respect to financial transactions?
There has to be a harmony between the need of privacy to a citizen, and the governments need to know requirements without being too intrusive, too overbearing, and indulging in kind of roving or fishing kind of inquiries into somebody's account. If there is a need to know in the national interest, for national integrity, for the integrity of the financial system in which we all operate, and the need not to corrode the system with the illicit activities, the government's foray to have a look at our accounts cannot be questioned. This has been spoken of in many instances by the Honorable Supreme Court in the 2018 judgment in Justice Puthuswamy's case, by Honorable Justice Sikri, Honorable Justice Chandrachud, Honorable Justice Kaul. All they have said that your right to swing your arms extends up to my nose. It can't be hitting my nose if you're trying to swing your hand. And if you transpose that, that image, the nose being the government, the nation, right? So whatever you need to do, you do, but not at the cost of the integrity of the financial system. Many of the legislations which have been quoted, like in the Puthuswamy's case, The issue was with regard to a particular rule amendment in the Prevention of Money Laundering, Maintenance of Records Act 2005.
Correct.
The issue was whether it is constitutional or unconstitutional under Section 300A and under the specific rule of the PMLA, Management of Records Act. It was held. It is right for the government to intervene because that legislation had been modeled, had been based out of resolutions of the General Assembly in a political declaration of 98 and 1990. Those are with regard to crime, corruption, drugs, etc. Those UN resolutions would say that confidentiality of the accounts should be maintained with a rider that there has to be proper surveillance of suspicious accounts. The confidentiality clauses which hamper and impede the right of the bankers and the agencies to look at somebody's account, it should not remain untrammeled. You should have the agencies and the government departments should have the right to look at suspicious transactions, right? The movement of funds. So all these areas are areas where the government needs to enter. So in my view, that has to be, and as accepted by the honorable judges of the highest court, the right of somebody's privacy with regard to his financial accounts is limited, and it is it is limited by the government's need also to look at those accounts for the purpose of seeing that the accounts do not contain any iota of illicit movement of cash or something like that.
So you make a very forceful case for, I would not say necessarily government intrusion or intervention, but for a balance to be struck between, on the one hand, the privacy rights of the citizen and with respect to their financial data, and the right of the state to ensure that the state's interest in terms of the nation and the economy not being unnecessarily being taken for a ride. So I think you made a very forceful case for the balance.
I will supplement my answer with this, that while the right for the government to look at the financial affairs of somebody is there, the decision as to why I should do that and the decision as to why my account should be open for investigation or inquiry, the case to be made out and the procedure to be followed, it cannot remain open-ended.
Cannot be unfettered.
Yeah, that's the reason as to why I would say that all the legislations will have a rule in place, how to control and regulate the behavior of the agencies and the departments,
right,
not to go after cases or after accounts which do not justify their intrusion in that manner. For example, Section 138, subsection 2 of the Income Tax Act would say that in public interest, you can part with information. Unless there is a public interest, you cannot part with somebody's information. The government is holding the information with regard to its citizens in a fiduciary capacity, right? It can't be using that information for any other purpose. It's a kind of a trust property, right? It's holding it in trust.
Right.
So that's the reason as to why the financial data in the hands of the government has been handled and will be handled with due care, caution, with the national interest uppermost in mind.
And I think what you've described in the words that you used is basically that the balance between the right of the privacy right of an individual and the state's interests is sort of got to be balanced, and one of the ways to balance it is, of course, the proportionality doctrine, which
Absolutely.
is that the state should not do any more than what is actually required in respect of contravening from the right. You spoke briefly about Section 138, subsection 2 of the Income Tax Act, and you said that this information can be taken by the department if there's a public interest. I think what a lot of our listeners and viewers would be interested in knowing is, what are the sort of circumstances in which this public interest arises? What needs to be demonstrated to show that there is actually an interest of the public at large which exists, and therefore we need to get this information? Now, this is perhaps in the case of Section 138, but there are so many different circumstances where agencies and departments of the government, and not just the income tax department, but other departments as well, will need to or want to get data with respect to some financial transactions. And I suppose largely they will sort of be based on essentially the same fact that there has to be a larger public interest. So what are the circumstances in which the state steps in? What is it that needs to be demonstrated or shown for the state to step in? And perhaps I think what will be great is if you could maybe give us an example of when this happens and how this happens in practice.
Many of the legislations for the enforcement of laws, financial laws, they have almost on a regular basis a provision which will allow for sharing of information with other agencies. The Prevention of Money Laundering Act will have some provision which would say that they can take the help and assistance of other agencies, of other departments in due cases, similar with the Income Tax Act. So the information exchange through legislation is possible and it has been adhered to. But take it from me, only when a red flag is raised in somebody's case, red flag, the radius of the flag, then only the information is drawn, right? Otherwise, without any red flag, without any factor which will warrant an account of somebody to be seen, government and its agencies will never like to get in there.
Right, and could you maybe give us an example of how multiple agencies work together in terms of studying financial data, processing it, analyzing it in order to ensure that nothing untoward happens through some of these transactions which have taken place? Yeah,
agencies, as I told, legislation somehow has made it possible for the agencies through legislative route work together. Administratively and in real life, agencies work together on various things.
Correct.
We have institutionalized structures. For example, the CEIB, Central Economic Intelligence Bureau. Right? That is a conglomeration of various agencies who sit together. Right? The Regional Economic Intelligence Council, REIC at the regional level, they are also a conglomeration of both center and the state. They work together. So we have enforcement agencies like NCB or the ED or the IB, the income tax, the DRI, the CBI. We work together on various issues, on various leads, right? When sharing of information is required. For example, the multi-agency center which the government has created with regard to the various exposes which have come up of late, right? Since many years, 10 years at least, we have the Pandora's papers, the Paradise papers, the HSBC papers, the ICIJ expose. So it can't be to the account of one agency that he can do that, right?
Right.
There are information with regard to, there are the implications for black money, Benami, FEMA, FERA violations. So the, various agencies, they work together for a common purpose.
So, unrelated question, but are turf wars ever common when multiple agencies are working together? Between
no, I would not have seen any. Okay. And I don't think there is any turf war because each agency, it works within the limits of the legislation which allows it to, right? So you cannot you cannot be flexing muscles beyond what your legislation has empowered you to.
So you may not have seen any turf wars because you're a thorough gentleman. But let's move on now, sir. Let's now talk about what the RBI has done. Could you tell us what it is exactly that the RBI has done and what is the effect of it?
Okay. So RBI in 2023 May, I think on 19th of May 2023, it came out with a circular. RBI came out with a circular that 2000 rupee currency notes will need to be exchanged or put in account before 30th of September 2023. It has been variously told it's a demonetization of 2000 rupees notes. As far as the law stands and the intent of the government as is being known from the various things which are coming out is that there is no, as against the 2016 time, 2016, the year in which we had the order of the Ministry of Finance. It was not a circular, it was an order of the Ministry of Finance under section 26(2) of the RBI Act. So so instead of that order under 26(2), now we have a circular, and it says that the 2000 rupee currency notes will continue to remain legal tender.
Right.
And the contents of the circular will be holding good up to 30th of September 2023. Meaning thereby, there is no whisper in the circular whether 2000 rupee notes will not be declared as legal tender after 30th of September 2023, right? There is no whisper of demonetization in the whole of the circular. Contrast it with 2016. 2016 started with the announcement and then the circular, and then the order under 26(2) of the RBI Act saying that from 8th of November 2016, the
then 500 rupees,
the specified bank notes, they have become
ceased to be legal tender.
They cease to be legal tender. Contrast with the current situation. Current situation, what is being deposited is legal tender. What is being transacted in 2000 rupees is perfectly legal, business transaction. So there's a whole world of difference between what happened in 2016 and what has happened in 2023.
So let me ask you this. Why withdraw, and I believe the words used in the circular were withdrawn from circulation. So why withdraw 2000 rupee banknotes from circulation if you want to allow them to remain legal tender?
Yeah, that's a valid question, very pertinent to the issue. Now the whole, the getting into the system of 2000 rupees notes in 2016, post demonetization at that point in time, was actuated by three things, as it has been told in so many words, because of the FICN, fake Indian currency notes, preponderance of those in the economy. Number two is unaccounted wealth, that was also stated, right? And the number three was terrorist financing also. These three were the prime movers as to why the 2016, the order came. In 2023, and because there was a vacuum because of the withdrawal of 86% of the currency notes, to fill in the vacuum at the shortest possible time with the shortest possible material, the 2000 rupees were inducted.
Right.
There is no room to doubt the intent of the government to put in 2000 rupee notes at that point in time, because it will be handling less currency notes in order to transact business at that point in time. Could have been an emergency measure at that point in time. But now that we have seen that 32 lakh crores of currency in circulation, and there is this 2000 rupee notes also, a part of it, nearly little more than 3 lakh crores in circulation as told by RBI. So there is a reason as to why you curtail the money supply by 3 lakh crores, because the rest will do, the rest can work, right? So the whole intent of the government of withdrawing 2000 rupee currency notes, not by resorting to 26(2) at this point in time, to me, there is a sneaking suspicion that they may not be looking at 26(2) in order to order for demonetization.
Right.
The trajectory will be to wait until 30th of September 2023 and look at how much of the 2000 rupee currency has entered the system. If sufficient number has come, then there may be a recourse to section 24(2), that is the government's prerogative also to order for discontinuance of a particular series of denomination.
Correct.
Right? It may go for 24(2). That is, I'm not a banker, but I'm looking at the options.
Right.
If sufficient number of 2000 rupee numbers has come in, which according to the government fulfills its desire to withdrawal, there may be later on an order, order under 26(2) on a later date. So what I'm saying is that we have to wait until 30th of September 2023 and the progress of the deposit of the notes, exchange or deposit of those notes. the percentage of 2000 rupees still being held by people in hand, not in the currency chest of the banks, that will determine the further progress of the whole, the trajectory of the legislation, where it will go, right? See, demonetization in 2016, it started with an order under 26(2). It moved to an ordinance in 2016 December. That ordinance is for the specified banknotes, cessation of liabilities, 2016. Then it ended with a law, Specified Banknotes, Cessation of Liabilities Act of 2017. So, unless that piece of order is not passed by the Parliament, 2000 rupees notes will continue to remain legal tender, will continue to have the guarantee of the Government of India. So, at the end of the day, whether all notes are deposited back to the system, one has, to me, with my limited knowledge of the banking, I would say, if the value of 2000 rupee notes is to be extinguished, the liability of RBI discharged fully, Government of India's guarantee withdrawn, we have to end up the order under section 26(2) as per law, So there has to be a SBN, Cessation of Liabilities Act 2023, I hope, or 24, one never know.
So let me try and summarize some of those points. I think it's, from your perspective at least, it seems to me as if you're suggesting that it's possible, we don't know for sure at this point, but it's possible that what the RBI has done right now is not a final and conclusive policy. It may be a work in progress. We might only see what happens later on this year or maybe even next year. What happens going forward will really depend as to, on 30 September 2023, how many of the 2000 rupee banknotes in circulation have been returned to the RBI.
Absolutely.
If a sufficiently high number has been returned, then perhaps the RBI will think in terms of maybe extinguishing its liability in respect of the other notes, the remaining notes in circulation. And in order to do that, that will have to be followed up eventually through a piece of legislation. Maybe it might be an ordinance, and then ultimately it gets perfected through an act of Parliament. And at that stage, we'll have a true sense of what this initial circular is trying to do. Let's say on 30th September 2023, not all of the banknotes have been returned to circulation, but no order or announcement is made as to whether they will continue to be legal tender or not, which means that it will continue to be legal tender. What will happen to those remaining 2000 rupee notes which are not in circulation? The scenario I'm thinking about, and we're seeing a little bit of this play out already, which is some vendors are becoming increasingly reluctant towards accepting 2000 rupee notes for their transactions, because they don't want to have the headache of converting those notes into other denominations being transferred to them. Are we going to see a lot more of that, particularly as we get to 30th September 2023? Is there a way by which those 2000 rupee notes can be withdrawn from circulation without a specific order or without a specific law?
Yeah. I want you to contrast the situation of 2016 to 2023 and judge for yourself which path compared to 2016 and 2023, which is better. In 2016, first we have rendered the specified banknotes as not a legal tender.
Right.
Then we got those money back into the system, gave them 4 months time, then gave them some more extended time for the Indian citizens up to, I think, 31st of May, and to the foreigners 30th of June. We gave them more time for them to render that back into the system. So we were in 2016 dealing with a position where the banknotes were rendered as not legal tender. Therefore, all these directions from the Ministry of Finance that pharmacies will accept these notes, railway stations will accept, railway booking will be allowed, medical stores will allow, milk booths will allow, some will allow this currency. It's not happening over there.
Right.
In 2023. Why? Because these banknotes are legal tender.
Correct.
So, because of the knowledge and the learning of 2016, system has been made more resilient and perfect. We are not jumping into the demonetization right away.
Right.
We are just gently goading the people that 2000 note has run its course in the sense that it has fulfilled the objects for which it was brought into the market.
Right.
Now is a time to go, right? But simultaneously with that announcement, it has remained a legal tender so that there will be less, disturbance in the market, right? We need not, issue those directions saying that, the pharmacies will take or the medical stores will take these currencies. We don't have to notify single one agencies, right? Single establishment and all those things. So the point is this to me is a more business-like approach to withdrawing currency notes from the market.
And to ultimately perhaps extinguishing them as well.
Absolutely.
So one thing that I continue to ask myself, I'm not sure how it's happened, is I think I've read somewhere in some press report that the 2000 rupee notes in circulation, the percentage of 2000 rupee notes in circulation as a representation of the total money in circulation has fallen. So from the immediate wake of demonetization, when it was a relatively higher percentage, till today when I think it's maybe sub 15%, if my figures are correct. Now, until May 19, 2023, there was no formal order withdrawing 2000 rupee banknotes from circulation. So in the absence of a formal order, how is it that the percentage of 2000 rupee notes as a percentage of the total money in circulation, how did that figure fall down?
One is the obvious answer would be hoarding of that money. Somebody is storing it somewhere, which is not letting it come to the open economy. The second will be the torn and the mutilated notes, which will not be in circulation. And the third is RBI not reissuing the notes beyond 2017-2018 as per RBI's own version. So these three factors,
right,
chances of hoarding it by hoarders and black marketers and the black wealth creators, that is one factor. One will be the torn and the mutilated notes, which will be very few. Right. But there is a possibility that some notes would have gone out of circulation just like that. And the third one, as I told, that RBI has not pumped in more currency. And there could be some kind of signal from the RBI to the banks, could be. I am not privy to those things. But holding back of the 2000 rupee currency and letting the economy run on the stream of the other denominations, that has happened. But if it has happened that way, through signaling, basically, it's all for the good. 2000 rupees notes withdrawal, unobtrusively, silently over a period of time, without raising too many eyebrows or disturbing the normal running of the economy. That is all the good for the economy.
So at different points, you distinguished what the RBI has done now in 2023 with what happened in November 2016 in what is popularly known as demonetization. And we've looked at how things have been done differently at this point. And of course, we don't know how things might unfold post September 30, 2023. Now, there continues to be a raging debate on whether that first demonetization of 2016 was a good idea or not. I don't want to enter that particular debate, but what I am interested in knowing is whether that demonetization episode resulted in more financial data at least being collected by the RBI and the other agencies.
No, the first demo of 2016, it opened all the enforcement agencies to newer areas what they would not have seen before, because the earliest demonetization of 1946 and then the 1978 one was not there in those times in order to see what the enforcement agencies would have done at that point in time. So in 2016, it was a first for each of the agencies. So the newer ways of doing things, both by the taxpayers and by the tax department and the enforcement departments. It was on for the throughout the duration of the demonetization of 2016 and much beyond that. For example, income tax department at that point in time started the Operation Clean Money.
Right.
RBI would have started Operation Clean Notes. So in 2016, we started the Operation Clean Money, in which the cash pumping into the accounts of people, they were scrutinized in order to find out whether they were disproportionate to the level of his business, or they have been planted in order to show his unaccounted income as his business income for that year in the demonetization period. There are many creative ways of doing things, and the creativity will depend on the urgency of the situation. So both the taxpayers were enriched with the knowledge as to how to face up to the demonetization, and also a great learning for the department to devise ways as to how the things on the field were to be captured. Give an example, we have a section called 285BA, 285BA of the Income Tax Act. It says that the reporting entities, they are to give you information.
Right.
They are to give you, that means give the department the information in various ways, right? One of the amendments in 285BA, in the rule, the governing rule will be 114I. In 114I, post demonetization, in 114E, we had an insertion saying that cash of 12.50 lakhs pumped in the current account of a business between 9th of November 2016 to 30th of December 2016, and cash of 2.50 lakhs pumped in the savings bank account of somebody between 9th of November 2016 and 30th of December 2016 are to be reported by banks to the income tax.
Right.
So, the exigency and the urgency of the situation, it enriched both the taxpayer and the agencies in order to look at and analyze the data they have captured. But let me also tell you, I may not be aware of the level of discovery of FICN or the level of
FICN is fake Indian currency notes.
Fake Indian currency notes, etc. But let me tell you, on facts, the taxpayers post demonetization increased significantly. 1 crore of new taxpayers. Personal income tax, collection from the personal income tax, it rose by 17 to 18%.
That's significant.
That's significant.
Very significant.
That's year on year. I can visualize the 2023, the limited version of what happened in 2016 will lead up to two things. One is more infusion of money into the banks. That's number one. And the banks opening up to more lending capacity. They will have more to lend, right?
Right.
And the second will be more money in the bank accounts of people, and some significant number of new taxpayers also coming in.
Do you reckon, sir, that this will have an impact on interest rates? Could it?
I will not hazard a guess at this point in time.
Right. So I'd now like to talk about the Income Tax Act and the measures that have been taken in the Income Tax Act to regulate what I consider to be regulating the flow of cash. My first question in this regard is, do you agree that there is a push away from cash transactions even in the Income Tax Act, or at least a nudge away from cash transactions in the Income Tax Act?
Absolutely. Over a period of time, the Tax Act, as far as cash transactions is concerned, is very pretty cautious about how to handle cash. There is a particular thinking with regard to cash payment and cash payment of revenue payments and cash loans and cash loan repayment, etc. There is a very clear idea which is emerging over a period of time that government would rather be happy if you are doing your business by regular banking means, while cash in hand and cash in the in business can't be negated or can't be denied, knowing fully well that India is a cash intensive country, and agriculture is the mainstay of, or rather one of the mainstays of the whole economy. Therefore, the reason as to why to nudge and to gently goad the people into the banking, banking areas or banked areas. So that has been the motto of the department in the tax legislations. So, giving an example, when it comes to cash expenditure, there are various provisions which would dissuade or say that if you are spending in cash and claiming an expenditure, I am going to disallow that.
Right.
Right. And if you are taking a cash loan, I will levy a penalty on your cash loan.
Right.
If you are paying a loan by cash, I will levy a penalty on that one. Those are part of disincentivizing.
Right.
And how do you incentivize? You say that if you are doing a business purely or rather substantially through the banking channels, I will give you a tax relief.
Right.
Right. So there are various areas in which government is gently prodding the people, the tax-paying people, that let's both together get to the banking channels and do our business. That way, what happens? Again, part of your earlier question, that government data with regard to the economy, it gets terribly jeopardized if a large part of your economy is a cash economy. We never get the data, and if you don't have the data, how do you plan for the programs, the national programs? You don't have those data, right? Apart from cash, also competition within the business sectors, it becomes uneven. Somebody gets an unfair advantage.
Correct.
Right? If he's not only doing the business in cash, but also not reporting, that creates an uneven field in the business and profession. That has a large impact. So tax legislation is deeply cognizant of gently eliminating the cash element in business and profession in all areas.
So I want to talk about some of these provisions. So we'll come back to those provisions in a minute or so. I think you've outlined that there's a general governmental nudge away from cash transactions. I think anyone who has spent any time in this economy is bound to be deeply cognizant of that fact. Whether it's in the form of the promotions of UPI or other means, there's a definite nudge towards cashless transactions, and they are promoted. What I would like to know, and you alluded to this a little bit, but what I'd like to know a little more is whether these particular provisions in the Income Tax Act, about which we're going to talk, are simply imperatives of the wider government thinking around cash transactions which have been written in, or whether there is a departmental view itself about cash transactions. What I'm trying to get at is, was there a point at which the department felt that, look, it's probably easier for us to minimize cash transactions or to shut down cash transactions rather than monitor them and try to enforce whether everything is happening according to the book and whether correct taxes are being paid, etc.?
There has always been a thinking, and this has only amplified of late, that to make India a less cash economy, right, where the incidence of cash in business transactions, they are minimized. It is self-evident from the UPI transaction details or Bhim Aadhaar or RTGS or NEFT, etc., where the numbers are pretty, very impressive as compared just a few years back. So people as a whole, they are cognizant of this fact, and the legislation and the legislators are more aware that to get people to the banking channels, legislation is the right route to do that. And the income tax legislation over a period of time has always held the banking route as the accepted route, and the cash route as an alternative route which has its price to pay and consequences to follow.
Let's start talking about the provisions. If there was one provision which to you signifies more than other, the push away from cash or the nudge away from cash transactions in the Income Tax Act, which is the first provision you would put your finger on?
All provisions with regard to cash, all provisions regarding to cash, they are all powerful in their own places, right?
Right.
So I'll just list out all those cases.
Sure, and we can talk about that.
Where there is incidence of cash and how the department or rather how the legislation is dealing with that one. So first is cash expenditure, right? So section 40A subsection 3, it says pretty clearly that if your tax payment in a day by a person is more than 10,000, then the whole thing will be disallowed. In business, other than in transport and plying of trucks, right?
Correct.
And in case of truckers and those in transport business, it is 35,000 rupees. 35,000. But the whole development started earlier when it was only 2,500. It rose to 10,000. Then it rose to 20,000. 20,000 and 20% disallowance. So now 20% disallowance in excess of 20,000. So now it has come down to 10,000 and full disallowance.
100% disallowance.
100% disallowance. If you are putting money into procurement of assets in cash, then more again exactly like 40A3. So that payment in cash of 10,000 rupees per day from a person, that also will be disallowed when you claim a depreciation on that asset.
Right.
Right? So, capital assets, if it includes any cash payment in excess of 10,000 per day from a person, you would lose the depreciation claims on that particular asset. So, this is, I started with 40A3, then I came to 43.1 proviso, then in section 35AD. 35AD is with regard to, there is certain specified business where the whole capital equipment itself is allowed as a revenue expenditure.
Right.
Giving an example,
like
semiconductor, etc.
Warehouses.
So this cash payment disallowance, exactly in similar manner to 43 subsection 1, is also framed into the working of 35AD.
Right.
There are provisions like 80D, right?
Insurance
Premia, right? 80G, that is donations to some institutions, right? In excess of 2,000 rupees in that case. 80GGA, donations to political parties by companies. 80GGB, that is donations to political parties by anybody. If it is in cash, it will be disallowed. So there is a clear-cut message to people that don't play with cash. We'd rather look at accepting the banking channels as the route. So this is one part of disincentivizing disincentivizing people from handling cash. Cash loan, you can't take beyond more than 20,000 rupees. So that is 269 SS. It is acceptance of cash loan in excess of 20,000. Its penalty is 271D. The penalty is equivalent to the amount which you have taken in cash.
Right.
Then 269T is the exact opposite of 269SS, where you repay the loan, repayment of loan. If it is in cash, then you tend to be penalized for the whole amount of the repayment.
Okay.
Then you have 269ST. It says that if you are accepting 2 lakhs from anybody in a day for an occasion or for an event, then the whole amount is liable to be penalized. The whole of the amount will be penalized. And now comes 269SU, where a business having a turnover in excess of 50 crores, it has to have an electronic acceptance of bank transactions infrastructure in place, right? So if you don't have that infrastructure, then you will be penalized. So these are situations in which the government is actively looking at the tax provisions to dissuade people from handling cash.
So let's spend a little more time on some of these provisions. Now, you spoke about Section 40A, you spoke about Section 43, subsection 1, the second proviso thereof, and you spoke about Section 35AD. For a moment, let's talk about these provisions. Is the issue just that if you are making expenditure in cash, there's a problem, and therefore we're going to disallow it? Or is there an underlying assumption or underlying thinking as well over there, which is that if you are funding something through cash, it is likely that it is cash that has previously not been reported, and therefore, since you have not reported it in the past, it is only fair that you are not allowed to claim a deduction on that expenditure. Is there an underlying thinking around that, or is it just a simple, straightforward, we're not going to let you claim expenditure if you are dealing in cash? This is the policy of the government. It's as simple as that.
No, I don't think there is a very long-drawn assumption behind disallowance of cash. This is the trajectory of legislation. Want to move away from cash to let the economy go 100% or near 100% through the banking channels to cashless. That is the way, and the income tax legislation is only supplementing the efforts to go cashless.
Right. Can we also just spend a minute more on Section 269 ST, which I believe is the provision which says that you cannot accept in cash more than 2 lakh per person per day?
Yeah.
Does that mean that over a period of time I can accept payments of more than, which in aggregate are more than 2 lakh from a single person, or does it apply only with respect to per person per day?
Per person per day. Right. And there is a transaction and there is an event also written into that one.
Right.
So 269 ST has been creatively interpreted on both sides. But I would say that going by the interpretations which is narrow and straight, 269 ST does not require any interpretation. It is pretty easy. There is 2 lakh of expenditure, and where 269 SS will not apply. Suppose it's a loan or a deposit, it doesn't apply, right? 269 SS will apply. 269 ST will apply to situation where 269 SS will not come into play. If you are accepting something by way of donations or by way of receipt or things like that, even specified transactions relating to, you sold a property, my agricultural land at in your village, right? And you get money as advance on sale of agricultural land in cash, you deposited it, right? Those transactions also will come under 269 ST.
Correct.
Incident is one, right? Day is one, and the receipt is, day is the on a day.
Right.
On a day. So 269 ST, we have to look at those things, but specified transactions, including on transfer of property, whether the transfer was fructified later on, even advance for receipt, advance for property also, those are included. Right. So 269 ST, to me, one has to go clearly. There is nothing to interpret 269 ST as far as I am concerned. It's brooks of not many meanings, which one can pilot his way through. It's pretty easy to understand. But general feeling one reads through when 269 SS, 269T, and 269 ST and 269 SU is, as you told, get away from cash, right. Move to the banks.
And this is the sentiment in those provisions, notwithstanding the fact that there may not be a direct relationship to tax as such. It may be unrelated to tax, but still there's a sentiment sort of saying, please stay away from.
Absolutely. Agree.
Let's talk about another provision which I thought was quite interesting, which was Section 13A, which puts a limitation on the amount of cash receipts that a political party can take. And it says that the upper limit of that is 2,000 rupees. Firstly, why is there an upper limit on cash receipts from various donors to a political party?
Yeah, see, we have to look at the insertion of this 2,000 rupees in 13A We have to look at the insertion. It was not there when the provision was put in place, right? When the provision was introduced, there are only 3 conditions: that you have to have a record of your accounts, you have to have the name and address of the person who donates 20,000 rupees or more, name and address, right? And it has to be audited. These simple things.
Right.
Later on, we have kept on adding 2,000 rupees, not by cash. It was introduced in Finance Act 2017.
Okay.
Right? And that was the time in which the electoral bond scheme in 2018 came about, right? So, correlating, just reading the whole thing together, Finance Act amending 13A to say that 2,000 rupees cash donations to a political party will be allowed, and beyond that it will not be allowed.
Right.
In excess of 2,000 rupees, it will be disallowed, right? And then in 2018, just about within the same times, the electoral bond scheme comes.
Right.
So, this is basically a move at transparent electoral process. Both the amendment in the Act 13A in 2017 Finance Act and the electoral bond scheme of 2018, they are part of the same story.
And both are intended to promote transparency in financial donations as far as political parties.
Absolutely.
And I understand that, but every election season we hear various news reports of maybe not a political party, but of candidates certainly in some way, shape or form offering some form of freebie or cash benefit to their voters in an attempt to seduce their vote. How does this happen despite the fact that we have such a strong provision in the Income Tax Act?
The electoral process, income tax is just one of the stakeholders.
Right.
That is led by the Election Commission of India, and the Representation of People's Act 1951 and the rules thereunder, they are potent enough to take care of the situations. The other departments and agencies' efforts are only to supplement the efforts of the ECI. So once the election is announced, de rigueur, we have the Election Commission roping in all the agencies to try and find out as to what to do on a routine measure to prevent misuse of the electoral process, right, or abuse of the electoral process. So in that connections, checking verification of the affidavits of the candidates, particularly compulsory, checking verification of the affidavits of the winning candidates. Then looking at the disproportionate increase in the assets and liabilities of the candidates, etc. Those are done every year or with every elections. Then you have the list of the number of political parties unrecognized but registered with the ECI who don't participate in elections.
Right.
There is a tribe, there is a horde of these kind of political parties, and some of them facilitate laundering of money. If you pay to those political parties, then you get a deductions under 80 GGA or 80 GGB. Because it's fictitious, that money is being rerouted or laundered. So, not only the Election Commission of India is aware, other agencies are also aware. So, those inactive, dormant political parties also, they queer the pitch when it comes to election funding and all those things, right? There is also the election expenditure observers. I am just telling you what steps the department, election expenditure observers, mostly from income tax and customs and central excise. We go there, check the accounts, check the level of, the ceiling limit for expenditure for that particular election, whether assembly or Lok Sabha. And so the point is the drive to clean the electoral process system can't be an overnight affair, right? No legislation will suffice. Coordination is extremely important among agencies and departments led by the ECI. But simultaneously with that, the culture, the public culture also, it needs to be molded and it needs to be moved in one direction where the incidence of cash and other material allurements, they their role diminish year after year.
Right. Can we talk a little bit about cash credits under Section 68 and some of those related provisions? Now, I believe the provision says that if you've recorded something in your books, if you've recorded a credit of cash in your books, but you don't have a suitable explanation for it, then the department has a way to assess it and to add it back to your tax and to actually take a fairly high percentage of that deposit away. Can you tell us a little bit about that provision, sir, and some of the related provisions?
Yeah. So it starts with Section 68. That is a cash credit. Cash credit does not mean that you take money or you record money only in cash. It
Right.
means everything, right? A credit entry in your books. That means somebody has given you some money or you have earned that money yourself. That's about it. Start with 68. That is cash credit. Then 69 is unaccounted investment. Unaccounted investment. Then 69A is unaccounted investment in gold bullion, jewelry and other things. Then 69B is partly explained and partly unexplained investment and material things and gold bullion jewelry. And 69C is unexplained expenditure. So this is the whole arrangement.
The gamut, yeah.
Before explaining to you in very short, simple terms, I will go a step further and say that why these are essential for somebody to understand, the taxpayer to understand, is that the consequences of anything being hit within the mischief of these four, it lands up a taxpayer in the special income zone,
Right.
where the additions, where these items, they take you to a 60% tax levy.
Under 115 BBE.
115 BBE, right? And there is there is a penalty of 10% and the surcharge and all those things. So you tend to lose, or you tend to be poorer by 78% of the income which is coming by way of the cash credit and etc. etc. So
Got it.
this is statistically, this is one of the maybe 5 most used provisions by the department when it comes to scrutiny assessments. The departmental officers would use these 4, mostly the first one, the Section 68, in order to say whether this credit is genuine or not genuine. Coming to Section 68, all it says that if a credit in your books of accounts, that means you are maintaining the books of accounts, if the credit in the books of accounts, that is somebody is giving you some money, if it is not explained by you, then I presume that it becomes your income, right? I presume that it is your income and it will be taxed differently. Suppose you say that this is not my money. I have taken a loan or a borrowing or something, or an advance or then that man has to come and say, that man has to say that I have given the taxpayer this loan, which is now appearing in the books of accounts, right? So, all in all, it says that the money in your account should be genuine. You should not be letting your account be the storehouse of somebody else's money. If you are keeping somebody else's money surreptitiously in your account, then it is your money. I presume that it is yours.
So you mentioned that these provisions, Section 68, 69, 69A, B, C, are statistically one of the most used provisions. And a lot of it has to do with the fact that this is something which is reported in the books. Now, there are 2 ways that I suppose a taxpayer could navigate these provisions. I'm not suggesting that it's necessarily legal, but one way, of course, is to actually record it in their books or to accept the department's addition in their returns and to suffer taxes on the basis of that. And the other is to do the more clandestine thing of just not taking the risk of recording it in their books and to just sort of keep it under the scanner. Do you feel that these provisions have actually resulted in some taxpayers opting for the latter illegal route of not recording transactions in their books as a way of avoiding the department's gaze under section 68 to 69.
See, the point is, it's not a, may not be a question of just declaring it. One can declare an income which the taxpayer has genuinely earned for himself, right? And the second is when the taxpayer is owning up somebody else's income, or he is showing, the credit entry may not be his income, right? It may be coming out of past savings, already tax savings. Many things will be there. What I'm saying is that if the amounts are recorded and those apparently are found out that this is money which is rightfully the taxpayers, and he has genuinely explained the nature and the source of that credit, nothing will happen. But if that explanation is found wanting, because of various reasons, I will give an example. Suppose a loan or borrowing is said to be the basis, the source of a particular credit in somebody's books, and the loan and the borrowing ascribed to somebody else is found to be bogus. Somebody would say that this 50 lakhs, I got it from 20 people in this village XYZ, and they earned by way of agricultural income in their hands. And you go there, there is not a bit of agriculture over there, and there are no people over there of the names given, right? So what do you do with that, with that kind of evidence?
Right.
So if you are attributing income to somebody which is either fictitious or not capable of, generating this kind of income, then it's right for the revenue to presume that it is your income, which you are camouflaging it in your accounts to show.
So have you come across personally any interesting examples of these provisions being used? 68, 69, 69A, B, C?
No, this is, as I told you, this has been majorly used by everybody.
So what's your favorite
example? These are not my favorites. Honestly, I mean, these are not my favorites for the simple reason that, this is commonly used. There is no novelty in this, these provisions.
So we'll talk about provisions which incentivize cashless transactions in just a moment. I want to, before that, come to section 194N, capital N for November.
Correct.
Which says that if I withdraw a crore or more of money from my own bank account, for example, then the bank will have to deduct 2% on my withdrawal amount. My question is, why would there need to be a deduction of tax on a withdrawal, which to me seems to be something that is a transaction that is completely free from tax?
Yeah. Before answering, going to 194N, I'll take you to 2005 Finance Act.
Right.
When, we introduced something called Banking Cash Transaction Tax, BCTT. It was there for 5 years, 2005 to 2009. All it said that if you are depositing cash in excess of 10,000 rupees in a day, or if you are withdrawing cash of 10,000 rupees in a day, or if you are making a draft of 10,000 rupees in a day, then this will entail a banking cash transaction tax of 0.1%. It was there for 4 years, 2005 to 2009. From 2009 to 2019, we never had any tax related to banking transactions. In 2019, it must have been felt at that point in time that it's about time to look at what's happening to the accounts of people, right? Cash outgo, cash incoming and all those things, because the department would be getting all this cash deposits information from its 285 BA. Any cash deposit in excess of 10 lakhs, any cash withdrawals of 10 lakhs, etc. They are part of the 285 BA.
The reporting that is done
by
entities.
They're being reported, right, in 114E rules.
Right.
So those are being reported. Now looking at those data over a period of time, it was felt that it's about time we look at these accounts. Who are the guys who are putting the money in of such amount, so huge amounts. Therefore 194N accounts.
And then have the wherewithal to also withdraw such huge amounts. So
that is, among the TDS and the TCS provisions, such we have understood so far, is that there are some provisions which does the heavy loading, right?
Right.
Like 192.
Correct.
That is the prime, mover of the whole
The
collection.
deliverer of monthly revenue to the
Yes,
department.
yes. 192, 194C, deductions on contracts. 194J on consultancy and professional services. 195 from
The non-resident.
foreign remittance. These are the big ticket provisions. But there are certain provisions which do not yield you a lot of revenue, but they are essential. 194 IA, sale of properties, where we don't get anything except 1%, right?
Yeah.
194N, cash transactions in excess of 1 crore, cash withdrawal in excess of 1 crore, doesn't get you anything, right? Those are basically to look at, monitor
Okay.
accounts and transactions, right? They are not heavy lifting provisions, but they are there to look at more closely the financial affairs of somebody.
Right. Now let's for a moment just look at section 44AB,
Okay.
which I think is one of the provisions which would come to your mind in terms of incentivizing cashless transactions.
Yeah.
And if I'm not mistaken, what it says is that if cash transactions represents 5% or less of your total turnover or sales or whatever it is, then the threshold beyond which you will be audited is when you have like 10 crores or more. In other cases, it would be 1 crore or 50. What was the thinking around this, sir? And was it purely to give an incentive to cashless transactions, or was there any other logic that comes into play in terms of cash transactions representing only 5% of total turnover of the business?
Yeah, exactly. So 44AB, after the amendment, it says that if the cash shell component on the gross sales is less than 5%, and the cash payment as a proportion to the gross payment is less than 5%, then the audit limit goes from 1 crore to 10 crores.
Right.
It is a straight incentive for people. For the auditing pressure will not be there in those kinds of cases. It's a state incentive, but doesn't give you any leeway for
Right.
payment of lesser taxes.
Right.
Payment of lesser taxes, because you are having more bank transactions than cash transactions, is happening in 44AD and 44ADA. 44AD is with regard to presumptive taxation in respect of business, and 44ADA is presumptive taxation in respect of profession. In the first one, if that cash component, again, if it is less than 5%, then the turnover, which has been amended in 2023, the turnover, it now goes to 3 crores, from 2 crores to 3 crores.
Right.
And in case of profession, it goes from 50 lakhs to 75 lakhs. And originally stated, the original provision would say that the cash component in the presumptive taxation in respect of the business, it would be 6%. Cash component will be 8%,
Right.
and non-cash will be 6%.
Right.
Non-cash will be 6%, and the cash component will be 8%. So my point is that there is a clear, self-evident move towards non-cash, and cash is not being shunned, but it is being gently eliminated gently being tried to be moved away from that cash economy.
If you had to pass an assessment on the impact and efficacy of these anti-cash provisions in the Income Tax Act, what assessment would you give? In terms of the various goals that it seeks to achieve, whether it's in terms of detecting and redressing tax evasion, whether it's in terms of nudging people away from cash transactions, whether it's in terms of giving an incentive to people to cashless transactions, how do you rate the performance of these provisions?
Intrusive and non-intrusive methods are available.
Right.
Intrusive methods like search and seizure and survey, they are there, which lead to detection of this cash component, and evidently so. Looking at the mores and the manners of how business is run in some sectors. The legislation has done its part. The administration of that legislation on the field, that holds the key. There could be many more innovative ways, even legislation-wise,
Right.
which can be incorporated to look at the cash element in business and how to deal with that one. But we have come a long way in handling the cash component in the tax assessments.
And as we draw to a close, in terms of the wider government interest or public interest away from cash transactions towards cashless transactions, do you have any thoughts on, or is there any way you would like to describe the income tax department's contribution towards achieving that objective?
It has been the goal, and the achievement also of the department over a period of time is highly creditable with regard to at least the searches and the surveys, and because I remember in demonetization time, something like 900 groups were searched, nearly 9,000 crores of unaccounted, disclosed, undisclosed income they were accounted for. So lot of the searches and the surveys, they end up in detection of cash and declaration of cash as income. Legislation is strong enough to take care of these situations, but as a general guidance, it would be much better if a general the cultural milieu is set so that acceptance of cash is it slowly gets reduced by the people itself, by people themselves.
So we started this discussion talking about the RBI's decision to withdraw 2,000 rupee banknotes from circulation. And whilst we obviously spoke about things like whether it was a replay of the demonetization of 2016 or whether it wasn't, we also covered the anti-cash measures in the Income Tax Act to regulate the flow of cash in the economy. Do you have any final thoughts on either of these subjects, sir?
The after effects of what is happening in 2023 at this point in time, read with what happened in 2016, I can foresee increase in the bank deposits, right? Little more rigorous scrutiny by the enforcement agencies with regard to very suspicious, obviously suspicious accounts of people who let their accounts be, the parking places for somebody else's money and vanish from detection from any agencies. Those will happen. But the agencies in the departments who are acting in this particular period, they will try and make the lives of the bad guys harder as they did in 2016. So the rules and regulations are in place. So demo in 2023, as I told, is much different from what happened in 2026. It is more business-like, quite efficient and silent, and its aftershocks to the economy will not be significant, and the strategy has been to be less obtrusive and mostly persuasive, without wielding the heavy hand. And so 2023 demo and the agencies who will help the 2023 withdrawal thing get more bite and teeth. I'm pretty confident that the legislation will make this particular initiative work pretty clear, pretty efficiently in the field.
Thank you, sir. It's always a pleasure.
Thank you.
That's been another episode of the Private Office Podcast. Thank you so much for listening. Thank you so much for watching. If you're enjoying these episodes, please tell your friends about this. Please give us a 5-star rating and don't forget to subscribe to the Private Office Podcast. Goodbye. Thank you.